This month's shares to buy today in April 2021 is for stock whose income statement, I haven't seen anything quite like this, guys. And they sit comfortably in the ftse 250, but not long if you were to ask me. And it's because being in the healthcare sector, getting all that support from the government, whilst also benefiting from the ever-growing demand of the property market, makes this stock that you see right here, guys. So if you couldn't tell by now, the stock that's made my shares to buy today in August 2021 video is a property investment company that makes their money by renting out and selling out properties to companies within the healthcare market. So they're making their money by rental income and also capital appreciation. Not to talk about the other benefits too. But before I go further, you guys know what you have to do, and that's to show my channel some love by liking this video, sharing it too, and subscribing with the notification bell on as well. But before I continue, the stock I'm on about is called Primary Health Capital, or PHP as they like to call it for short. And as you can probably guess, that's also their ticker symbol in the London Stock Exchange as well. And as I mentioned before, they're a property investment group that's in a very niche but yet very important part of the property market, the healthcare sector. And instantly, I like the sound of this, guys. For the ever-growing population and the current affair of things, with coronavirus, I think the government and the whole economy know now more than ever how important it is to keep building and funding the development of this industry. And this is why companies like PHP are likely to be very profitable, because they've just got that double whammy. They've got the security coming from the government, and they've also got the increased demand coming from the property industry. It's just a win-win scenario for them. And with a current share price of £1.60 per share, this can prove to be such a bargain if the stock continues to rise like it's been doing over the last few years. But enough of the hypotheticals, let's see how the cold hard earned numbers are doing with the financial documents, starting off with the income statement. Their revenue has pretty much increased throughout the years compared to the previous one. Their operating cost has jumped around though, but when you look at it from an overall perspective, they've done a decent job at keeping their costs controlled. However, this section right here has confused me, guys. In 2019, they gained £114 million in their cost. That doesn't make sense. Very weird. Most people probably look at that, get confused a bit, and then continue on. But you know how we do it here on DS Learning Finance. That made me want to even study their income statement even more, guys. Truly understand what was going on. And what I actually realized shocked me, but in a good way. Because as you can see, a sizable chunk of their outgoings in 2019 came from this section right here, merging with a company called MedicX. For those of you guys that don't know, when a company does a merge, what they're basically doing is permanently unifying themselves with another company. It tends to require one company buying out another one. In this case, it's PHP buying out MedicX. The best example I can think of is ExxonMobil. Back in the days, guys, there was a company called Exxon, and there was also a separate company called Mobil, guys. But what they did was they decided to merge and join forces and make the ExxonMobil that you guys now know today. And so in this unification process, they were able to acquire each other's customers, learn from the experts in their relevant fields, and join forces and make a bigger powerhouse into making a bigger dent in that market. But what I will say about a merger is that it's kind of an enhancer of those separate companies involved. So if those companies are doing great individually, then chances are that merging company will do great as well. But equally so, if those companies are doing bad, or maybe just one company is doing bad, it can pull that merging company down. But regardless, it's impressive to know that the stock is doing this, and gives me a justifiable reason to continue looking into this stock further. But enough of the income statement. Let's see what the balance sheet's about. Hopefully there aren't any more surprises in this financial document. And if they are, there better be good ones as well. And their balance sheet is reasonably okay. You guys know what I love to see the most on the balance sheet is that their total current assets can cover every liability that they have. So the total liabilities, guys. Not just the total current liabilities, but the total long-term liabilities as well. And unfortunately, this stock can't do that. But at the very least, what I require is for a stock to be able to cover its total current liabilities with its total current assets. And it's a similar sort of thing for the long-term counterparts as well, which obviously they can do. But where I have to give it to them is in this section right here. Majority of their long-term assets comes in the form of long-term investments, guys. I cannot stress how important it is for any stock, even the big timers, to have a lot of money in this section right here. It shows the company's high ambitions and their willingness to want to grow further. Big bonus. But will the cash flow statement be just as good? The cash flow from operating activities has risen each year, which is what I want to see, guys. I want to know that this company is expanding further in terms of revenue and profit year in, year out, which they're doing. Whilst their cash from investing activities is negative, which is good, we want to see that. We want to know that they're making more investments. It has fluctuated quite a bit, especially in 2019. But as we can recollect from what I previously said, we know that this is probably down to them having to fund that merge that they did with Medic X. So I can allow this one to slide temporarily though. The cash from financing activities, you guys know, I always expect this number to be negative, comfortably negative. And as you can see, they've only recently turned negative in the most recent year, guys. The previous years before, it was fully positive values that we're talking about. But I will allow this to slide because of the type of nature of the business PHP are in. Because when you really sit down and think about what they're actually doing, they're basically taking people's money to invest further. And it's this concept that I wouldn't be surprised if other investment companies also have positive values. So it then sparks the question, for them to have a negative value, it speaks financially healthy of the stock. Because they're saying, look, we're making so much money that I don't even need to take any more money from you to invest further. Speaks good volumes of the company. Overall, when you look at primary health companies and their financial documents, it doesn't take much for investors to want to invest in their stock. Nothing screams out more that this stock wants to continue expanding by merging with another company. Also the fact that they've got a large reserves in long-term investments and the income statement, they're making money, guys. This stock is just a no-brainer to me. But what I will say though is with investment companies like this, chances are you're going to probably have to pay additional fee. So there's that to factor into things as well. But that's just my thoughts, guys. Let me know what you guys think about it down in the description box below. And whilst you're there, make sure to like this video, guys. Share it too. And subscribe with the notification bell on as well. It's your favorite YouTuber, DSLM Finance, sharing my thoughts and my experiences with you guys every Sunday at 3 p.m. Have a great day, people. Bye. Whoa.